Central banking is an extremely profitable business. They're always finding ways to make more money. Even when the market has no semblance of reality left in it, the central banks are still generously giving. But of course, everyone needs to question what happens if something changes. You came here for the truth, so let me unveil that for you. Today we are going to look at the ECB's warning of a stock market crash. Let's begin. This individual here is from the Dutch Central Bank. He's also on the ECB's Governing Council, and he said this: "It increasingly feels uncomfortable to have low volatility in the markets on one hand, while on the other hand, there are risks in the global economy." And that's what I have been talking about. I've been saying this consistently, and now we have a central banker talking about that. Not me, the central banker's talking about that. I'm consistently being ridiculed, and the central banker says it, but it's okay, it's fine. Sure. All right. So a lot of what has happened with the central banks is that they have been giving out trillions of dollars over the years, pushing it around, sloshing it around the markets. We have seen particular assets that have been rising and rising and rising and rising. And at the same time, there are all these different risks that have been present within the economies, within the markets. And we see those. You'll see the geopolitical tensions that are rising. Yet the volatility, the risk, essentially, that's out there, at least according to the market, is next to nothing, almost zero, that there is no risk. I would have to disagree with that. And surely this central banker here is saying the same thing. Doesn't make sense, he's saying. A sooner than expected normalization of US monetary policy, normalization, again that word, where financial markets see a slower pace of rate hikes than what the Fed Reserve had communicated, would quickly turn investor sentiment, the DNB wrote in a report. That makes the risk of sharp market corrections real. If they are not going to continue their policies of printing money and keeping interest rates low, we are going to have a crisis. That's what he's saying. Now, a central banker, any of these bankers, anybody on the inside, they don't usually spell it all out. You got to piece it together. And he's pretty blunt. And we're looking at this in a time when everybody's just covering up. Everything's fine, everything's fine, everything's fine. We keep hearing that all the time. And I heard a lot of that back in 2007. I heard a lot about it actually in 2006 too. And even all the way into 2008. Don't worry, it's just subprime, it's just subprime, it's just subprime. And it wasn't just subprime. In fact, it was everything underlying it. And then what did they do? They fixed all their problems, right? No, actually, nothing was fixed. Nothing at all had been fixed from the financial crisis. And we have those same problems in existence today. But let's not talk about that, right? Let's just pretend it doesn't exist. All right. And essentially what they're saying is that the ECB, they're not talking about normalizing rates at all. They're going to stay low. Don't worry, everyone. No reason to panic. We'll continue to print money. We'll continue to keep the interest rates low. And everything will be just fine. Here are the central bank balance sheets of the ECB, the BOJ, and the Fed. You could see that the Fed has been keeping it at this rate for quite some time, whereas the ECB and the BOJ have been increasing. And they fluctuate, of course, day to day, but essentially this is the cause, this is the case. And looking at the amount of money that each of these central banks hold is just staggering. I mean, the ECB is over 5 trillion. You're looking at all of the rest of the central banks, 4.5 plus trillion dollars each of these, and this is only 3 of the central banks. $15 trillion. Fake money, printed up, nothing behind it, buying up the worst garbage possible, okay? Debt in one way, shape, or form. the toxic assets, asset-backed securities, garbage debt from all these companies. Doesn't matter. We'll take the worst you have. All right. Now, the Wilshire 5000 index, essentially, we're looking at all of the US stock markets put together into one index. Because if you look at, for example, the Dow, you're getting a very small understanding of the total market. So the Wilshire 5000, I think, is a much more accurate description of what's happening within the US stock market. And we'll look at that for a moment versus the federal debt and the FFR percentage, federal funds rate. It's funny. It's actually pretty funny because you can see that bubble territory here back in the dot-com crisis, bubble territory here, right, with the financial crisis, and then at this level, far surpassing. We are here, you know, that ratio that they give you, $26. Somehow that's not a bubble. You know, I totally agree with what they're saying here. If it was a bubble before in this ratio, as I've shown you literally hundreds of these different ratios, all showing that we've gone way far overvalued, and everything, historically, everything reverts to the mean. Everything. It actually goes beyond it, and then it reverts to the mean. And nobody seems concerned, that's for sure. Well, have fun with that. Okay, this is a 2-for-1 chart here, and the next one as well. US velocity of money, GDP versus M2. Now, the velocity, and I'll show you actually at the bottom at the same time, the Eurozone velocity. We're seeing the same thing. Since the financial crisis, both of these have seen a decline in the velocity. Some regard this as being one of the most critical aspects of being able to determine what's going to happen. Stock market crashes, whatever. A lot of people, many people in the comments, and there's others out there that say, why isn't anyone looking at this? The velocity has been declining now. In both of these examples, money needs to change hands. That's currency. If you're going to hoard, so-called hoard your money, all of a sudden, that money is not productive, let's say. And this really, really worries the central bankers, the banking establishments, and the government. They need that money to trade hands. They need that dollar, so they print up a dollar. That dollar needs to make its way through the system. I work for a living, and then that money comes to me, and I use that money to go to the store to buy something with that money. They use that money then to go and buy supplies, the place that's making those supplies, and you know, it just goes on and on and on and on. Instead of just that money just sitting in a bank vault or sitting in a bunch of zeros on a computer, that doesn't do it any good. Just printing up currency has never solved any problem historically ever. It actually always makes things worse. They can't increase the velocity. They can't do that. They're not successful at that. And this is the problem that they have. Same thing goes in the ECB. Same thing goes for the Federal Reserve and everyone else. But of course, my opinion here, that they don't print up money in order to try and stimulate the economy. They are doing this to be able to take wealth away from individuals and give it to the technocrats, to the elite, whatever you want to call them. U.S. consumption supported by lower savings. You'll see that here in the upper chart, and at the bottom, U.S. but primarily supported by asset prices. Any deflation of financial assets should have a significant impact on consumption. I completely agree with that, because if, for example, perfect example, in Canada, we have seen the real estate prices rise to levels that are just absolutely ridiculous. Ridiculous levels. And that has allowed people to use their houses as you know, they take second mortgages on them, they get home equity line of credit, they're able to use it as a bank account, and as a result, they're buying other things. All of a sudden, if those prices start coming down, they're not going to be able to buy anything anymore because they're already in the highest amount of debt that they've ever been historically. Don't expect that to make any sort of change if this occurs. Can it continue on forever and ever? Well, I've read fairy tales before. All right, then looking at this, I mean, this is ridiculous. This is ridiculous when you look at this chart here. State debt to GDP, we're looking at 2016 numbers. I mean, Puerto Rico is just off the charts. Look at this. Compare this to every one of the states, and you get a crazy picture. I mean, if you were to just extract this one, you would be able to see the variances in between these different states. But based on this, I mean, it looks just so gradual, but actually that's only in comparison to Puerto Rico. I mean, it's crazy to see it all. I don't know what's going to happen. The debt here, I don't think they'll wipe it off the debt. I mean, that would be crazy to see that. I don't know. I don't know what to expect of it. But I just wanted to point out simply the numbers and how staggering they are. We'll see if they get their bailout. We'll see what will happen to all their debt. I'm curious. So we'll see about that. If you found this video informative, please give me a thumbs up. Remember that you're supporting this hard-hitting data. So I want to bring this to you every single day if I possibly can. So I do appreciate every one of you supporting me in any way, shape, or form. Thank you very, very much. If you found this video informative, I know you'll find my books, The Money GPS and my newer release, Global Economic Collapse, even more informative. My first book is about the 4 asset classes and how to profit from it, whereas the newer book gets into familiar concepts, but I do get into other topics such as reducing your monthly expenses, becoming self-sufficient, solar panels, and sort of that sort of thing. So if you're interested in that, you can always go to the description below where there is a link to Amazon. You can look through the books over there. Take care.